Hello and welcome everyone. I am Rachel Deschelle, Senior Manager of Trading Services here at Schwab and your host for Trading Price Patterns. Now in this class we build on the basic concepts of technical analysis. So you may want to get started with checking out our Getting Started with Technical Analysis webcast first if you are still kind of learning some of the basics. But today we are going to trade some price patterns. I have a lot of triangle patterns, but specifically flag patterns we're going to focus on today in this class. Now, please feel free to chat in your questions, comments, requests during the session today. I have, who is it? Brent Moore's in the chat today helping me out. So, and please give us a follow on X. He is Brent Moore's CX. I am Rachel-CS. Please give us a like on this video and subscribe to us on Trader Talk Schwab Coaching as well. Now, before we dive in today, let's hop into some of those important disclosures here. So, options carry a high level of risk and are not suitable for all investors. Information we're going to cover is for general informational, educational purposes only and should not be considered any type of recommendation or advice. And we are going to cover the paper money software application today. Keep in mind there are some differences between that and live. Now, as far as our agenda, we're going to start this the same way we always do with our market overview. We are going to review our trades from the previous weeks. We are going to discuss the concept of price patterns, place new example trades, go through our trade management there. So that is what we are looking at as far as today, and I'm going to pull up Thinkorswim now. Let's start with our market overview. So I think it's pretty much the same kind of thing that we have been seeing with the S&P 500. We have this rounded top-looking formation that has formed over the past few months. It's been nearing, especially last week, it got pretty close to the 200-day moving average there, right around 66.15. That's going to be that first near-term level of support that we're seeing there. So we had a little bit of a bounce from there like we saw last week, but honestly, the longest term structural horizontal support is really going to reside right around that 65.50 zone where we can see that price has touched quite a few times over the last 6 or 7 months. So still that's going to be our line in the sand there. So let's get into some of our old trades from last week. So we placed a trade on Coinbase. We saw a couple different patterns here on Coin. Where we were looking at this triangle pattern really taking shape here. We bought the breakout with 47 shares. We just did an equity trade there. And our entry was right above 208.86. You can see price didn't stay too long above that before really bouncing down here. Now, our stop is right at this level, right around 199.54 or so. So that's going to be our line in the sand as far as where we would get stopped out to the downside. MP was one of them as well that we had an order on where it looked like it was an inverse head and shoulders. It kind of took shape into something else. We saw this as the left shoulder, this as the possible head, this as the right shoulder. And price really failed at that resistance there and turned into a little something else that doesn't look like an inverse head and shoulders pattern. So with this one, what we're going to do, since that is not the price pattern that we are looking for, we're just going to delete that order there. So I'm going to cancel that order out for us on MP. Now, Dell, we traded, I could kind of zoom out and show you what we were looking at. We traded this bull flag setup in Dell. And essentially, we took that entry right around 148.78. We had our stop down here if price re-entered the pattern right around 143.80. Today, I moved up our stop a little bit so you can see it right around that level, right around where our entry was. So just moving that up as we go. We still have our profit target of resistance up there to the upside. But what we can kind of notice right now, actually, in the last few days of price action, if I zoom in a little bit closer, and I'm going to remove this drawing so you can see, we almost have another bull flag actually kind of setting up here, if you guys can see this. So we have maybe the start of the flagpole starting right here, maybe going up to this high here, and price retracing a little bit. So I'm going to draw that for us. We're seeing lots of flags in the market recently. So we have about $11 move to the upside. And then if we take this, take the lows of the candlesticks, we have a little bull flag, possible bull flag, I should say, maybe setting up here. So we're going to see if price breaks again to the upside. We are trading that pattern, trading that trend. We have our stop to the downside to protect us. But that is what we are watching there on Dell. Now, another one that we actually have here is NET. So we have Cloudflare. Now, we traded this double bottom breakout formation there. So our order did get triggered. We do have our stop. We actually had our stop in here below. I actually raised that to our breakout level. So that should be right around 204.50, right around that level or so. So that stop did get raised. Now, something notable about this one, which I think this actually provides a good trading opportunity for us today, just looking at this from a technical perspective, we can see we had that breakout of that double bottom formation where this zone right around 204, 205 was. We had price really throw back to that support level, which a lot of times when price does break out, it may retest that support level. So it may firm up that support level a little bit more, bring other buyers into the trade. And that's kind of what we're seeing here, because we did see a bullish engulfing candlestick yesterday, and we are having quite the follow through today with price trading and looking like within the next couple hours, if everything remains the same, looking like it may close above the high of that low day. And so especially when we have a bullish engulfing candlestick like this, the most powerful follow through signal on these is going to be a close above the high of that bullish engulfing candlestick. So we're going to look for that today. But I honestly think, because this is a price pattern, we have seen this hold, so that close above the high of the low day, or possibly the close above the high of the low day. We're going to use this as an example trade too. I know we're already in the common stock for this, but I thought this would be a good example to maybe make this into a trend trade, a support bounce trade here, using the options as well. So we're going to actually enter into a long call trade here on this one. We don't have any upcoming earnings events. We had that last month back in February. Volatility does still remain at some lower levels here. And we've already talked about how we have this upside target of this pattern, probably right around 244 or so, which is quite a move from now. And we have seen that price has taken a little bit of time to digest a little bit of those gains, pause, give us a little bit of pullback. And of course, we're seeing that push today. So some traders may say, hey, I want to wait for confirmation to see if we do indeed close above this high of that low day. And so you may submit your order for tomorrow. So let's say we say to wait to submit this order for tomorrow. We can most definitely do that. You can do that with the conditional orders. For the purpose of this class, we are still going to go through the motions of placing the trade here. So we're going to go with a long call. Let's talk about how long this pattern took to form. It's been, I think we talked about how it's been a little under 2 months. So it was roughly like a month and a half or so. So we may want to look a couple months out from expiration, because we know that a lot of times there is symmetry in not only price with that measured move that we took from the pattern, but there's also a lot of symmetry in the markets with time as well. So the time that it took to form this pattern may be the time that it takes to reach that target price. we've already seen that price has moved quite a bit of a ways from that level already in such a short amount of time. So we'll kind of keep that in mind too. So we're going to go to the Trade All Products tab. Notice down here, since we didn't see that visual on volatility, the current implied volatility percentile is 30, so it's still relatively low, supports a decent option buying environment, just because we know with options, typically when volatility is lower, it typically favors the environment for buying options, since if volatility rises, we get higher option premiums, and we want to buy low, sell high. That's the goal here. So what we're going to look at is the 18th of June expiration here, and we're going to take a look at an option that's just slightly in the money here. So we're going to look at the 210s here to look for a little bit of intrinsic value. We can obviously see there's tons of open interest, little bit of volume on today. The main thing I'm kind of paying attention to here is the spread on the bid and the ask, and we can see that that's still within roughly a 10% spread. So that's kind of what we're gonna, it actually just changed now, but we're gonna kind of focus on that, and we're gonna focus on this delta of a little more than 60, really telling us that if we do have a dollar move in the stock, theoretically, that option price should move about 63 cents. We may see a little bit of time decay with the theta there, about 15 cents per day, and then that sensitivity to volatility, 1% change being about 42 cents on the option there as well. So on this one, I am going to right click on this option, go to buy custom with OCO bracket, and I'm going to bump this up to 2 contracts here on this one, because we do have about $10,000 that we can put into a trade, but keep in mind we would be risking roughly 6,700 on this, since when we are buying the option, we are putting the entire premium at risk, but we will have a stop on the downside there to try to protect us. We're going to make this a good till canceled order there. We're going to try to put this at the midpoint of entering today. We know we're not due a fill at the midpoint there. And for our limit to the upside, we saw those possible profit targets right around 244. Now, I know that may seem quite a bit of a move, but I think since we are still trading this pattern, let's just stick with some of those measured moves, that those rules on really looking for that pattern objective. Now, we know that they're not guarantees, but we can manage this trade, move up our stop as time goes. So we'll kind of still focus on that. So we're going to put this, we're going to go to the conditional order entry, click on the gear on the right hand side. And we are going to say when the price is greater than or equal to, what was it, 244. Like, I already forgot what it was so far. We're moving slow today. So when the price of the stock is greater than or equal to 244, since we don't necessarily know when price is going to get there, if it's going to get there, what the price of the option is going to be at that time, if it does get there, we can actually use this as a limit offset. So if we still want to have control of our price, and if we want to say that, hey, whatever the limit price is of this option at the time that the stock reaches this level, send this order. This is kind of how we can do this. And this is one for you, Kevin Baker. I know you requested this one, so I'm making sure I'm putting it in today. So we're going to first unlink this little link here on limit price. And we're going to go down to where it says limit linked to. Instead of linking it to the trigger or linking it to like what the price trigger is for our entry order, essentially what we're going to do is we are going to link this to the current bid at the time. So whatever the bid is at the time that the price of the stock is 244, we are going to say we want to send a bid. Let's just play with this a little bit since the spread is still within a 10%, but we know it's a couple dollars wide. Let's just say we want to send a limit price that is, let's go 30 cents above the bid. So let's just say whatever the bid is at the time. So if the bid, let's say, is $10 at the time, and the ask is $13 at the time. Well, we're gonna have a bid that goes in at 10:30 essentially. So that's what this is doing. So you can make it an offset here, put in your value there. You can make it 0, 0, so just send it at the current bid, whatever you want to do there. So hopefully that helps with going through this step here. So if you guys have any questions on that, want me to go through that again, let me know. I'll keep my eye on the chat there, but we may hit a couple more of these as we go today. So I'm going to hit save here. And then on the downside, let's just say since we are doing 10 contracts and we want a little bit of a tight stop here, let's just look at a 15% loss. So if my entry is going to be right around, let's just say right around the midpoint of 3270. Oops. Okay, right around that midpoint of 3270, I'm going to take 3270, multiply that by 0.85, and that's going to give me a stop price, which we're going to go stop limit to have a little bit more control over the price this time. We're going to place our stop price right around 27.79. Okay, and keep in mind with this stop limit, now again, stop orders on options will trigger when you're selling. The stop orders on the options will trigger off of the asking price of the option. Keep in mind the asking price of this option is about $34 right now. Man, that price is moving as we build out this trade. But essentially what it's going to do is it's going to trigger off the ask, and then you're going to have the limit price that's going to come in a little bit below the stop order. We're going to use that as a little bit of a buffer, because keep in mind if the stop gets triggered, we have the limit order that comes after. And so if you have the limit order at the same exact price, and let's say price ticks down on the next tick after it activates the stop, you need to wait for price to come back up to tick on that limit order for you to be able to get a fill. So we're going to give ourselves a little bit of a gap here on this one, and we're going to place this at, let's say, 25.79. Now, another thing with this type of order is there's no guarantee that you will get filled essentially at all, especially on a stop limit, because let's say the stock does gap down overnight and you let's say it opens up, the stock opens up at a price that's much lower than where it was expected, or let's say the option price opens much lower because of that, there is a chance, because your limit is up there, that you may not get a fill. So kind of keep that in mind. There's benefits and risks to each of these orders. So we're going to place this order here. We're going to hit confirm and send, and we're going to send this to our price patterns one. Okay. Yeah, we may have to adjust that order. I see Gary, you put in the chat, Net's price is moving too. Yes, it is. I think people found out that we were going to place this trade, or maybe even saw my post on X. Maybe that's what it is. Anyways, but price has been moving quick, so we may have to adjust that accordingly. But let's get into a couple other price patterns today, because I know that was actually one from last week, but I thought it would be a good chance to kind of revisit that one, maybe show a different type of trade for us today. So I have a question in the chat. Sorry I joined late. How do we search for these patterns? So we all kind of have our own process as far as searching for some of these patterns. I know some folks will plug in different criteria on the scan. Specifically, I know if you're looking for maybe reversal patterns and things like that, you may be putting in, or I guess bullish reversal patterns, you may be putting in a couple different indicators for an uptrend, like trading above its 200 period moving average or its 50 period moving average or something like that, especially if you're looking for more of those bullish type of patterns, and then kind of vice versa on the downside. I know personally when I teach this class, I look through a pretty long list of just filtering for pretty liquid stocks that are listed. Sometimes I intersect those with weekly options. So the stocks that offer weekly options, because typically they'll have a little bit more liquidity there. But just a couple basic filters like that to filter out hundreds, if not thousands of stocks and get you to a manageable list. And for me, that looks like a couple hundred stocks that I go through here to just try to find the best pattern setups for you guys. So a little bit of a lengthier process for me typically, but I know everyone has their own process when it comes to those. And thank you so much for putting that in the chat there as well, just that one webcast. So let's see. Yes, Beth, I think we do need to cover searches and scans more. I like that feedback because I think if we can get some good setup scans, maybe give you guys some ideas to narrow things down, I think that would help as well. I think one of the most powerful things though is getting the practice and using that perfect little set of eyes that you guys have there and trying to find these formations on different time frames too, because these patterns are going to show up on every single time frame. So I think maybe having a repeatable process like that as well will definitely help. So I definitely agree with you there. I like that idea for the coming weeks. So let's look at some other patterns here. So I have one that I'm seeing on Southern Copper. I'm going to take off this 200 period moving average to give us a little bit of visibility on the chart. Okay, I see two patterns here. One has already completed, one is working its way through. Can you guys put in the chat what you are seeing? Because I'm curious if you're saying the same exact things I am. I'll kind of wait for you guys to respond on this one since I know that there's a couple second lag here. But essentially, I am seeing a couple possible bearish patterns here on the chart. One's completed, looking like that double top formation that we're kind of seeing here, which I'm seeing you guys put that in the chat. We had this little double top with that neckline right about there. We had that bullish engulfing and then it finally broke down. I see a reverse head and shoulders. I don't see that one, but maybe I can look at it in a different way or maybe on a different time frame. Kelly, shout out. I am seeing the bear flag as well. So that is exactly what I'm seeing on this chart. So I'm actually going to move to my drawing set and actually draw what I really saw on this chart here, which was this bull flag really taking shape here within the last few days. So essentially what I did was I just connected the high from this day from the 12th, I think that was maybe Friday, and connected it to the low that we saw, and then we had a little counter trend rally for a couple days, and then we saw that gap down, that breakthrough today. And what I drew here, I took the time to actually draw this. So before our session today, this is the 2% move outside of that specific flag pattern. So I know we use that as the entry or kind of as that confirmed level a lot in this class. We kind of stick with that 2% rule. Now, that confirmation of a pattern could look like a number of different things. It can mean multiple closes beyond that resistance or support level of that pattern. It can be a certain percentage move. Whatever that looks like to you, stick to that repeatable process. But here what I'm seeing is that price is really forming this little doji candle, this really tiny doji candle right at that level of that 2% move. So it's getting a little iffy to see if whether this is a confirmed move or not, which is why we want to wait an extra day to just kind of see how this firms up for us. But if we look at this flag, the reason why I mention it is a bearish flag, cannot talk today, bearish flag here is because a bearish flag is a continuation pattern. So we can see from the highs, price has really found this downtrend, found another high, which was a lower high, made its way to another low, another lower high, another lower low, another lower high. So we can see that throughout this time, over the past few weeks, price has been in this short-term downtrend. And so a bear flag in this sense is that sharp continuation, a little bit of a throwback or a pullback there, and then another break to the downside. So what are we seeing here? We're seeing about an 18, maybe possibly $19 move with that measured move in the flag pool. So essentially what we're going to take is just that entire depth of that move, and we're going to project that from the breakout point from where that flag was. And that's really going to place our target price, our measured move of that pattern, right around 155.48 or so. So 155.48 and 170.74 are those two levels to watch. Now, obviously, price is fiddling with that right now. So we can see, just kind of zooming out, that's where those levels reside. So for us in our discussion today, I think this can create an opportunity for us to possibly do a couple different things. This may be one of those patterns where we say, hey, we may want to wait one extra day to see if price really stays below or closes below this confirmed level right below 170.74, because right now it's trading right on that now. So we may want to see if there is a close below that level there. Now, there is the opportunity to trade this bearish thesis in a number of different ways. You could sell a call spread, you could buy a put spread, you could go short the stock. Implied volatility is relatively high for this one, so I'm not going to show the example on buying a put in this case. But I did want to show an example of maybe possibly doing a time-based conditional order to say, hey, wait until the next day, and if price is below this level, then send this order. So we're going to just do this on the equity. Now, I know we've never in this class shorted a stock. I think this may be a good opportunity to try that. So we're going to try that on this one today and kind of go through what that may look like. So I'm going to go to sell custom, and I am going to use my $10,000 OCO order here, this custom order template. And I am essentially going to, so we're going to go to sell and buy. So we're going to flip those. Okay, so we still have $10,000 to put into this trade. Now, on this one, we're going to go for our entry for a conditional order. We're going to click that conditional order entry to the right-hand side. And we are going to say submit at, and we're going to wait for tomorrow because we want to see if tomorrow trades below that level. And we're going to say by tomorrow around this time when this webcast started. Let's see. What day is tomorrow? Okay, Thursday the 19th. We're going to say 9:30. We'll just go with market open. Okay. So at tomorrow's market open, if Southern Copper is less than or equal to 170.74, we are going to send this order at market. Okay? So we're going to send a market order. It's going to fill out the next available price. Only if at the market open, or I guess it's going to send at the market open, wait to send this till market open, and it's only going to trigger if the price of Southern Copper is less than or equal to 170.74. So we're going to put a save order on that. Now, something I do want to mention too, because I know Brent put this in the chat. Remember that when you are shorting a stock, there is an unlimited potential risk on the trade because you are shorting a stock. The stock could go down to zero, but it could also go up to infinity. So we're going to manage our risk accordingly in this way. We are going to, on the downside, our target's going to be 155.48, where we'd want to buy that back. So 155.48. And where could we place our stop? So where could we place our stop on the upside? Well, let's look and let the candlesticks give us a little bit of an area for signaling. Maybe we want to put our stop if price re-enters the pattern right around 174.02. So I'm going to use 174.02 here for our stop. And again, we're using a stop market order. That's going to trigger off of the last traded price and become a market order. So any questions over that time conditional there? I'm going to keep an eye on the chat there, but I'm going to go and look to send this order here and place this in our price patterns class. So again, wanted to show that one just so we could show what that time conditional looks like there, but a trader may kind of approach that wait and see if it closes below that level just to get that confirmed signal from trading this price pattern there. Okay. So that is SCCO. Now we have another one. Let's go to Dollar General actually. So what are you guys seeing here on this chart for Dollar General? Because I see a little something a little bit familiar to what we just saw here. So we've obviously had a little bit of a topping formation similar to what we saw in Southern Copper as well. And we've seen as of recent over the last few weeks, we have this short-term downtrend that is really shaping up. So we've had lower highs, lower lows, and we have another breakdown of another pattern today so far. And this may actually give us a confirmed break to take this trade today. So let me know what you guys are seeing in the chat, and I will put those, put my drawings on the chart there. So I'm going to go to drawings and drawing set, and I see that bear pennant there. So from the trading day that we saw from March 11th, I'm going to get rid of this so you guys can see that entire flagpole distance. From the high of that to where we gapped down, if I draw that once again as my flagpole, I can see that that's about an $18 move. And then I can see that price was really forming this almost like triangle type pattern, which forms that pennant. And then today we got that breakdown of Dollar General here with a move below a 2% move to the downside below that 128.30. Okay. So this is kind of giving us an example of how we could take a bearish trade in this particular example. Now, I'm going to take the flagpole and project that to the downside to see where our targets could be. And isn't that lovely for a technician's eyes? We see this quite a bit in this class. It doesn't always end up looking super perfect. And again, we have to keep in mind that patterns are not guarantees, but it always makes us chuckle when a measured move finds a familiar level of support or resistance, finds a gap level somewhere around there. So I'm going to kind of draw this as well to the downside there of where that target may be. So right around 112.70 may be that target to the downside there. Okay. So if we're kind of looking at Dollar General, another thing I may want to keep in mind is what the implied volatility is looking like for me to see what type of options trade I would really want to take in this case with Dollar General. Because again, I may, if volatility is relatively low, I maybe look to be a buyer of options, a specific put in this case, and maybe be a seller of an option, maybe selling a spread if volatility is relatively high. So in this case, it's looking relatively low and still in the 38th percentile. So I'm going to take that opportunity for a short-term trade with just this 15th of May. Actually, we're going to go a little bit further out. The 18th of June with 92 days left till expiration. That gives us about 3 months. Now, I know this is a pretty short-term pattern, but it's still quite a bit of a measured move. So we'll give ourselves enough time for it to get there. And so we're going to go with 92 days out from expiration in this case, and we're going to look slightly in the money on this one on the put side. And let's take a look at, we're looking here. Let's go with this 130 strike put here on this one. Okay, so you can see that the spread is tight between the bid and the ask. We have a delta. Let's go. I like this one a little bit better. The delta is a little bit larger on the 135. It's a little bit more expensive, but we'll get a little bit more of a move if price continues to move in our direction here. And the spread is still pretty tight on this one as well. We'll see about 5 cents in time decay. We do have about 25 cents in fluctuations in the price with response to a 1% change in implied volatility. And per $1 move in the stock, our option should theoretically move about 58 cents. So we're going to take that here. We're going to right click on this and buy custom with OCO bracket here on this one. And let's talk about our targets and our exits. Okay, so we're going to buy a put. Excuse me. So we're going to buy a put here. We're going to go a few contracts here on this one since we do have about $10,000 to place into any one trade. And keep in mind, we are risking roughly 5,800, almost 5,900 on this trade here because most we're putting to risk is the premium that we are really putting here to play. So we're going to make these good till canceled. Let's look back at the chart at where we want to possibly take profit on the downside and where we'd want to stop out our losses here. So if I go to the charts tab, right around 112.70 was that level that we'd be looking to target. So let's put a conditional order on that one to say, hey, whatever the price is of the option at that time, we want to get out right around 112.70 if price does reach there. So I'm going to go here in this first one, conditional order. When price is less than or equal to, what did I say, 112.70 or so. And we're going to make this a limit offset once again to say whatever the bid is at the time, whatever the bid is at the time of that option, because we don't necessarily know where it would be. We can use our Theo price tool to really check that out, giving us a few different simulations. But essentially, no one knows. We don't have a crystal ball. So we're going to say we want control over our price using a limit order. Whatever the price of the option is, we're sending it at the current bid price if it goes lower than that. So that's our profit taking order, you guys. Now, as far as our stop, let's do a 20% stop in this case on this one. So if I take our entry price of $14.60, multiply that by 0.8, that will really give us our stop to the downside if price goes back up right around 11.68 there. And that still stays within that 1 to 2% or 0.5% to 1% risk of our account of not risking more than $1,000 to $2,000. So we're going to keep that there. We're going to hit confirm and send in this case, and we're going to place this in our price patterns class. So we're going to hit send there. Okay, we have a few minutes left. I'll go through some other patterns that we are looking at here, and I see Brent answered one of the questions that we had in the chat. Thank you for your help on that. So other patterns that we're kind of seeing in the market that we may be discussing in further weeks. We discussed some of these in the class yesterday, my long options class, when we talked about volatility and price squeezes. But we're going to go through a few different triangles, a couple rectangles, some things that you may be seeing breakouts of that may give you some ideas for paper trades here. So one of them being super microcomputer, we're having this coil, this symmetrical triangle where we can see how many times price has been touched on the upside and on the downside of this triangle formation, and we can just see it's getting compressed and compressed and compressed. Volatility is also squeezing as well. So that is definitely one for the watch list. That is occurring at a crucial level of long-term support there with SMCI. So that's one of them. We do have a little bit of a coil also taking shape in Open Door Technologies as well. I kind of marked what a 2% move outside of that band would look like, or outside of that resistance level would look like. But we see that ascending triangle where we see price has touched the upper bounds of this at least 2 times. We have 2 touches of support on the downside. That is what forms a triangle, 2 touches on each side at least. So seeing that there develop as well. Rocket Lab, we did see a big breakout yesterday of this triangle pattern. We're seeing a throwback to support there. My order that you're seeing there is from the long options class, but we are seeing support getting retested on this one as well. Oklo, same thing, another coil, another volatility compression happening right at a crucial level of long-term support as well. You can kind of see a similar theme really firming up here with a lot of tech stocks. This is a utility stock, but you get the idea. We have another triangle in Shopify here over the last month and a half or so that's been firming up as well. Price is really teetering between resistance and support of this one. Fortinet. We actually just saw from yesterday that price bounced from a level of resistance, and it's really been in this pretty tight range here for the last 6 or 7 months or so. So you can kind of see that one has been one for range traders, maybe selling around this level of resistance, buying at this level of support there. Another triangle pattern occurring at support. We are seeing this all over the board. NTNX. We see that there. There's your 2% move outside of that range. Price is kissing resistance right now on that one. That's a lot of touches on that one too on both sides. What else? 2 more. We have a range breakout here from resistance with SanDisk Corporation. So the support was right here where we saw that bullish engulfing. We just had a resistance break of that one. Very similar setup in what we're seeing with Micron leading into, or I guess after their earnings here. So we saw support resistance with a breakout possible doji candle today. So wow, that was a lot. We are at the end of today's session. If you guys liked the session today, found it useful, please give it a thumbs up. Please subscribe to us on Trader Talk Schwab Coaching. Please also follow Brent and I on X. We post a ton of charts. I know me specifically, all these price patterns. I'm Rachel Dash CS. He is Brent Morris CS. And thank you again for all your help there in the chat and all of your guys' questions as well. I appreciate your time, and I will see you next time.